Thursday, December 7th, market analysis, Stan Ehrlich. Good morning. California time, 9:52, just after the middle of the trading day for the traditional stock market hours, California time. And we are going to get rid of that window. Okay. I start out with the stock market indexes, and I am going to start out again this morning with the E-mini in just a moment. Got to arrange my order of things. Here we go. Now, we're in an area of resistance. Yesterday, we did get an ER sell signal. You know, sometimes they are very profound, very important. July 27th, for example, October 13th last year, for the bottom of the market, had signals. Sometimes they're small profits, sometimes they're small losses. We don't take large losses. We always have a protective stop in immediately with the ERSignal trading system. And the yellow dot represents the stop loss. Is the traditional name. I prefer protective stop, level, order, price number. And we're not there. We have a little loss on the trade. We opened on the E-mini around unchanged, which is typical, and rallied up to the sell order, which is the approximate middle of yesterday's range. There's a mathematical formula for it, but you know, if I told you, I'd have to kill you. So not liking this rally at the moment, stronger than I would like. The opening was great. It was right around where I wanted, and it started to dip, but everything's come back a little. So let's look at the next chart. Spider, pretty much the same story. We opened above the offer to go short because of yesterday's red ER sell signal. Got filled on the opening for a little bit, half an hour maybe. It was profitable. Turned to a loss where it is right now, a little bit of a loss, and we are not stopped out. We didn't hit our protective stop, the yellow dots. And if this market starts to go down and make new lows for the day, and certainly lows under yesterday's lows, we should be on our way down substantially to get down to just before Christmas for the Santa Claus rally trade, which I will continue to detail to the minute and day and a track record for a quarter of a century in the days to come. Today, I'm going to pass on that. I did it yesterday, but we have some adjustments we're making so that we can be showing you the E-mini Santa Claus rally instead of the spider. Different trading hours. So that's a significant factor. The spider on this chart, same as the E-mini. I need to have a turnaround and head south ASAP. And this is the 1 minute chart showing you our triggers, entry, current trade. It's a red trade line, so it's a little bit of a loss at the moment. Where our stop is, yesterday's price action, variety of other things. Next chart is the daily data. DIA did not quite have a bearish engulfing ER sell signal. It didn't make it below Tuesday's lows yesterday on Wednesday. So today, Thursday, we have an inside trading range, doji. We're still overbought. I still think this market, for those reasons of being overbought, is going to turn around and come back down to close some gaps. I'm looking at an approximate 50% retracement to get down to, you know, 345, a little higher, 6, maybe 344 would be fine, 344.30 more accurately. But in that ballpark, definitely 345 within the next 2 weeks. This year, Christmas is on Monday, so we have only a couple of weeks and a day until Christmas. Next chart. The Russell 2000 did have a bearish engulfing sell signal yesterday. It did not yet rally up to the middle of yesterday's range, and it's not the middle, but it's not too far from it, and get short. So we are short ER1 from the signal day yesterday. There was a scalp. I think it made a very small amount of money, or maybe lost a little bit. I don't remember. But the position trade is still in the short position and losing a little. ER3 is not filled yet, period. We need to touch the red dots in order to get short for ER3. And that would be an ER3 scalp, day trade, and an ER3 position, which sometimes makes a tremendous amount of money. Next, and we sometimes hold those position trades for months, not very often, but months on occasion. And that means the trends have to continue in your favor, or you'd get stopped out. There's a big gap to close below the market on the QQQ. I think it's trying, like the other indexes, to top out. We are now a little higher than yesterday's highs, and that's the highest high for about 4 days, but it's still in the same price range where it has stumbled in the last 2 or 3 weeks and pulled back down again some, not much. I thought a couple of days ago, like Monday, that we were on our way down, but support, or the gap rather, closure was a very tiny amount and it popped back up. I got to tell you, these indexes have been a little stronger than I would normally expect, and I've been watching them a very long time. Next, Russell, the NASDAQ futures, outside up day at the moment, bullish engulfing, implies the market's going to work higher. Definitely not what I wanted to see. If we turn around and head south and get down below yesterday's close, which is all the way down to today's lows and yesterday's lows, quite a ways. We're up 217 at the moment. So that does not seem likely. But again, it's not like we're screamingly higher. It's a decent rally, but it's still half the day is still left. Let's see what happens. I don't want new highs for the trend. That would cause me to be wrong, and it would also alter my commentary and expectations somewhat. But the fact that the Santa Claus rally usually has a dip before Christmas is not going to change. Whether we have it this year or not, I don't know. It's just that usually that's what happens. Next, E-mini, 1 minute. I'm going to go to futures now and show you the daily data on the E-mini in a little bit different perspective. We're in that resistance area where the E-mini continuation contract, not the December or the March or a specific month that'll expire. These contracts I use go up and down with the nearby futures that everybody is trading the same way, but they do have slightly different prices. They're fantastic for doing cyclical research and pattern research, as well as daily reversal stuff. So that's why I use these. Next chart is the 10-year, the NASDAQ futures. Again, a bullish engulfing like the Christmas contract. And I just am very, very skeptical about this rally. I think it's about to stop and turn back down, but it hasn't. Next chart, bonds. They're about unchanged, almost exactly. It looks like they're up 1 tick. We're overbought. We're not at any particular price level at which I think it's going to turn down, but I wouldn't be surprised at any place in here because of its overbought condition. We do have, like notes also, a great trade in progress in bonds, which I have detailed ever since we saw the green bullish on October 23rd. Go back and watch my YouTubes for those dates if you wish. And we're just doing fantastic on this trade. It's over 10 points, I believe. Yeah, around 11 or 12. But probably going to end very soon and have a retracement. Now, I am very, very, very bullish on bonds and notes long term, but it's due for a technical correction, which would probably bring it back down in the ballpark of 116, 15, 14. Next chart, 10-year notes at a resistance area that I've had on this chart for a long time. It is also almost overbought, not quite. So there's a very little bit of an elbow room for it to pop up a slight bit more. I don't even know if it's going to be able to do that. But the head and shoulder bottom formation I've outlined here since it was developed, is working great. Our upside breakout was on November 28th. 2 days later, it tested the blue neckline, and it's just been going up almost every single day since then, almost every single day. So our trailing stop is protecting a really great profit, and we are long the notes from 2 days after the bullish engulfing for an ER3 fill. That's that retracement fill. ER1 had a profitable scalp, and if it is able to stay in a long position for the ER1 position version, it's doing extremely well. But it's built to trade on a shorter term basis, not to hold the positions quite as long as ER3. Next, and everything is adjustable here. You just have defaults that I feel are the most profitable historically for a wide variety of items. Certainly, people tend to optimize for a particular market or symbol or instrument and trade those. But these strategies I'm showing you have an input and settings for a general performance. Crude oil, oversold in a support area, should bounce very soon, at least back up to the top of the red zone, 73.20, and maybe even a bit more than that. But watch out, crude oil should turn around and start to rally very soon. Next, in time and price. I have to say the exact same thing for natural gas. It's about to rally. Probably said the same thing a few days back, and it keeps on coming down. But this is nowhere near the kind of condition that you normally want to go short during. It's the kind of condition you want to look for buy signals, definitely. Next, heating oil. Now turning oversold yesterday and today. Not quite at any particular special price level. It is breaking out of this pennant or wedge to the downside. I think it could easily slip off a bit more to 2.4, but I wouldn't go short. I'd be looking for buy signals because of its oversold condition. When it gets oversold, it tends to bounce. There you go. Just look at the correlation here. Oversold, bottom. Go back over here, oversold, bottom. Again, oversold, bottom. Some are big, some are small. Oversold, bottom. All right, next. Gold, silver, and platinum. Wow, what a fantastic sell signal we got on Monday. I screamed bloody murder about these sell signals in gold and silver. I think it's going to come down to 1,950. A big move down. At the moment, I'm not surprised it's bouncing a little bit in the support area. I'll drag this to the right a few days. Okay. And once we start to clear the bottom of this support area, the blue area, then I think it could drop off a lot faster, a lot quicker. RSI is extremely neutral, right around 50. So that's not a factor one way or the other. This bearish signal, just because it's gigantic, does not necessarily mean that it's going to be a really big move. You would assume as much, but that's not necessarily true. Look at silver. Every day since our new sell signal on Monday, at a resistance area and in overbought condition, we've been going down Tuesday, Wednesday, and so far today. That is just perfect. I mean, I could go down faster and quicker to be more perfect, but this is darn good. So I'm looking for a test of the next support area, 22-ish, 22.5, very soon. We're not oversold. There's some elbow room for any kind of a bounce on the way down to 22.5. We'll see what happens. Bearish on silver, obviously. Platinum, we had a bearish engulfing, but not a sell signal on Monday. Now, today we've got an outside up day at the moment, a bullish engulfing, which implies it's going to rally. You know, I just don't believe that. I haven't got anything bullish on the chart at the moment, except for a little bit of support and a bullish engulfing. which at the end of the day may not hold up. But at the moment, it's a higher high, lower low, and a currently quoted at higher than the previous close situation, which dictates a bullish engulfing. If there's a rally, I can't expect too much more than 948, and I don't think that's going to happen. I think it's going to turn down right away. Copper, not too much going on. I am between a rock and a hard spot, like another market that we'll look at. I think it was cotton, and it's bouncing back and forth like a ping pong ball. So you get close to support, look for buy signals. You get close to resistance, look for sell signals. So far, no major breakouts. Next, soybeans oversold for the first time now in a support area. Almost a bullish engulfing. If we rally above yesterday's high, bingo, this will turn green just like that low on October 12th. And it would imply that we're going to go right back up to these resistance levels and maybe even more. Let's see what happens. I think a rally is starting in soybeans now, today. If we start closing below today's lows and below the support area, that changes the picture dramatically. It will become very, very bearish very quickly because this support level is so important and it's working at the moment. Next chart, bean oil. Support, no reversal, just a rally at the moment, but same kind of story. I think it's going to rally a little now. Next, soybean meal. Support was oversold a couple of days ago, not far from it right now. I think it's about to start a rally, but today is a new low for about a month and a week or so, 5 weeks or so. And yeah, that's what I got to say. It's going to start a rally. Don't see any signals yet. Next, corn. We picked the bottom of the market on November 29th. Blatantly obvious bullish engulfing, relatively small, oversold conditions, classics combination I love. We're still in the trade. Looks like we're going to have our second highest closing price today, and it gets a little stronger. We just might have a new high close. And the only thing after that is to make a new high since we're long. We're starting to get into some resistance. I mentioned that yesterday. This is a bear trend. This is a bear market. I'm fighting the trend with a long position, which is working. But I can't be overly bullish. There's just nothing here that's really catching my attention that says long-term bull. It's a bounce in a bear market. Next, wheat. Basically the same commentary. No signal at the bottom, just oversold. Now we're overbought. Last 3-4 days. And we bumped against resistance yesterday. So today's up a little. No new high yet. I think it may turn around and start to step right back down again. Next chart. Oversold cattle, looking for a rally. Bear trend. Let's look at the bigger picture. It is in a support area. I talked about that. It started to get in a support area actually 2 or 3 days ago, but collapsed really badly yesterday and is starting to reach the next and even bigger, better support area, which is right around, and I should draw a support line in here, 160, maybe 161. So we're close to turning back up. Pretty sure about that. Hasn't done it yet. Waiting for a signal. Next, hogs. Looks like it wants to make new lows. Support didn't hold. We have a bullish, an oversold condition before, but it already cracked the support area for a day and a half or so. Now we're back down there again. I don't see anything magic about the low last week or a week and a half ago. I think it's going to get broken and we're going to see lower levels. Next is OJ. Fantastic. We're still short. This is a rally day. We had a bearish engulfing at the top of the market and it's doing great so far. We're not stopped out. Our stop has been trailing down, as you can see on that yellow line. And it'll turn out to be almost 100% guaranteed, a very profitable trade. Looks like it's trying to bounce, maybe a good one for the first time since our last major sell signal on November 21. The sell signal before that was great, a very, very big range. But I mentioned before, just because the range is huge, top to bottom, does not necessarily mean you're starting a major trend change. I thought so. It could have. It didn't. It bounced off support. And there we have another bearish engulfing. Again, not as big or profound looking, but it could be that it's turned into a long-term bear market. I can't tell yet. I need to get to the support area and then break below that. And that's going to take some time, probably a few weeks, maybe in January. Next chart. Cocoa. Gapped up. No particular comment except bull market. Looks to me like it could challenge the highs. Doesn't want to stop yet. I got to see closing prices below 4,092 before I start talking about the bear trend, bear move again. This just looks like it could get stronger, quicker, faster. Next, coffee. Resistance and overbought, stopped the rally. End of last week. I think it probably will dribble off some more and slip some more. That resistance area is pretty darn profound. We just might come back down all the way back to 160 to maybe even 140 again. Next chart, sugar the sweet. Unchanged, oversold conditions, a little bit below the bottom of a support area, so that's not holding. It's not falling apart today at the moment. Not doing very well either. It might bounce. Oversold and just slightly below the support. Next chart. Cotton to rag. Well, between a rock and a hard spot was the right phrase to use because the support level did turn it around. And we've got a new high now for about a month. And it's probably going to rally, I can't help it, right back up to the same resistance area that it got back up into in July. Got a sell signal. And in overbought conditions in August, again, overbought conditions in September, and not quite the same combination, but it stopped rallying in late September. Yeah, can't help it. Back up to 89. And here we are on the E-mini again. Maybe it's stalled out. Let's go check the 1 minute chart real quick, and I'll let you go. This is the 1 minute E-mini. It's been going sideways. Let's hope it turns down, starts to make new lows. Getting below 4,587 would be good. You guys have a great day. Profitable trading to you.